Yeah, that's basically what happened. And then there was a big decision of whether or not they want to back up all depositors, because most of them were uninsured. But at the same time, the policymakers want to restore confidence in the rest of the banking system. One of the big challenges is that, of like the 17 trillion plus deposits that are out there, the FDIC only has, less than 1% of those deposits backed up by insurance. Even the ratio that is fully covered by insurance, they only have something like 1.3% covered. Now, to their credit, I mean, since 1933, they've never not paid on a insured deposit before. But, basically, it's one of those things that they don't want huge, vast bank runs happening. And a lot of this is a confidence game. That's kind of the whole game of fractional reserve banking, is that these institutions are inherently unstable. I've described it as basically like we're all just casually storing our money in leveraged bond funds. And so obviously that's, if you phrase it like that, would you say, is that a low risk investment? People would say, no, of course not. But that's what we all just casually use for our, savings. You would just put grandma in a highly leveraged bond fund, and that's where she holds her money. We kind of normalize that. And so they wanted to backstop confidence in the system. And they've also added this liquidity facility. It ironically generally benefits the larger banks, because you can only use that facility if you have a lot of high quality liquid assets. And whereas if you look at the long tail of smaller banks, they're generally more loan driven. They hold illiquid loans that they made and that they're not really easily resellable. And so they can't use that particular facility. And so I think we're in an environment where the large banks are pretty well protected, whereas small banks probably still face ongoing challenges.
Is the government's intervention in this case a bailout?
Partially, yes. I mean, basically, the non-insured depositors, they would have gotten most of their money back, but based on the losses that the bank had, they would not have likely gotten 100% of their money back. So that was that's basically socializing losses. Basically, other banks are going to absorb that cost over a wider base to get those uninsured depositors whole. So that's number one. And then two, this facility that the Fed and the Treasury put in place.
The BTFP?
Exactly, yes. That facility, that is sort of a bailout in the sense that it's not free money, but it is selective access to below market credit at above average terms. So basically, it's easier credit than they otherwise would get on a open market basis. Now, if you zoom out, I mean, the whole system is kind of artificial, right? I mean, when all these banks are building their system on top of the Fed, and the Fed is actually managed by a central entity, it's like both sides are bailout. The whole system is kind of one giant ongoing bailout. But yes, this particular action did have characteristics that were at least partially a bailout.
And when the president went on camera and said that taxpayers will not be paying for this, is that disingenuous?
It's one of those things around the margins. It's different than if they just outright gave the money. I would say that people are going to pay for it, not necessarily through the government budget. They're going to pay through it by their overall cost effectiveness when using banks in general. The Federal Reserve's liquidity facility is backed up by $25 billion in Treasury capital to absorb any losses that they might incur, which seem somewhat unlikely. And so overall, taxpayers are not really sort of taking a direct hit from this, but it is a spread out cost among all market participants.
So going back to the BTFP, why are foreign banks eligible? And maybe let's touch on what's happening with Credit Suisse, because it seems like the European banks now are imploding.
So foreign banks, some of them have branches in the United States, and they tie into the dollar-based system, and so they're able to use that facility similar to how domestic banks can for similar purposes, because otherwise you have the long chain of offshore dollars kind of coming back and causing problems in the domestic banking system. As far as Europe is concerned, that's more of a developing story because that's really happening today.